Good afternoon. It's Andrew Powell here from
Good
GSX.
afternoon. Hi, Andrew.
And thank you very much for the award, Ecosystem of Excellence, and the Exchange Award. Thank you to the TADS.
Very much. Congratulations again. Okay. Any questions on the floor? If not, then we can go first.
Sure. Hi, Andrew. This is Miles from TADS Awards. Hi. Question from us. So you mentioned ESG as part of GSX's pitch. Do you mind elaborating slightly on that area? What do you mean by ESG when you were talking about it during your project's pitch?
Yes, so thank you very much. So we see our exchange in Labuan, where we've been granted a conditional license by the Labuan regulator, the LFSA. We see two verticals. One, a traditional vertical, which your previous gentleman from Ledger was talking about, you know, the so-called STO security tokens, or REITs, real estate investment trusts, or bonds, which could be issued as a digital product. They can be fractionalized to increase the ability for financial inclusion. There is also a growing requirement from so-called buy side, so pension funds, for example, to list what's known as ESG, environmental, social, and governance, having good governance. So, for example, ESG could be, the E part could be a green bond. So we see in China, for example, lots of green bonds are being issued where to help out with the environment. So basically, if you're going to issue a green bond, I would suggest you'd want it to settle T+0 digitally rather than on a piece of paper. It's not much point cutting down trees if you're going to issue a green bond. The other big macro element is what's been happening during the COVID period. And I believe at Davos this year, the big conference in Switzerland, they're going to be talking about the great reset. You know, how do we come out of this current COVID crisis, and how do we view the world? One thought is that when it comes to shares, shareholders are no longer looked at shareholders, but stakeholders. You know, stakeholders in the company, but also, you know, making the world a better place. So I think what's going to happen is we're going to see a pivot from not just environment, from the environment issuing green bonds, but also to the S and the G, social and governance, good governance. So, you know, in that context within ASEAN, I think we're going to see a lot of talk about financial inclusion. You know, how mum and dad retail investors, through their brokers, through their institutional conduits, how they can invest in products which is going to make the world a better place. And also for other topics such as female inclusion, for example, how can we ensure that a company employs the right amount of, say, indigenous people in Malaysia, etc. So yeah, I think ESG is going to be increasingly important from the buy side. For the big pension funds, people are going to want to, these guys are going to want to invest in this. BlackRock, one of the biggest pension funds in the world, led by Larry Fink, has come out and said, look, ESG is going to drive their investment decisions, not so much traditional earnings and profit capabilities of companies. They're going to be looking at various ESG type measures. That also has a technical element that we can use all this big data to measure compliance for ESG, maybe through smart contracts. So yeah, it's a very, very exciting area. And I think in this part of the world, you know, we could really see it take off. So hence our suggestion that ESG would be a very important vertical for our exchange.
Understand. And, you know, you mentioned Labuan earlier, right? So why did GSX pick Labuan specifically, and and not other areas? Is there a specific advantage for selecting Labuan that other jurisdictions aren't able to provide? What is the reason?
Yeah, so we've been speaking to our friends up in Labuan for the past 18 months. We started a dialogue there with them, not only with the regulator, but also with their commercial arm, the Labuan IBFC. They've come across as a very forward-thinking jurisdiction, willing to embrace not only new technology, but also to change their whole modus operandi. If you sort of go back, say, 20 years ago, Labuan was set up basically as an operational hub for their banks. All the big banks had the operational hub there, Maybank, RHB, etc. A bit like in Singapore, a lot of the banks have a downtown office here in Singapore, but their operations are in Changi, out near the airport. So Labuan was their sort of processing area, but it dawned upon them that, why not transform this area into a very efficient, effective way to enhance capital markets, by providing sort of a dynamic platform, a forward-thinking regulator. And also Labuan is a non-ringgit jurisdiction. So the ringgit is to some extent a restricted currency, but Labuan is non-ringgit, as I say. So there can be US dollar issuance, pound sterling, euro. But what's really exciting to me is renminbi, CNY. And, we all hear about One Belt, One Road. So actually our banker is one of the big four Chinese banks, China Construction Bank. So there's definitely a thought that Labuan can help Xi Jinping's, directive for One Belt, One Road, and help that through Southeast Asia. So it's quite a dynamic area. And also the Labuan regulator and their commercial arm, the IBFC, also sees it as a Islamic hub. So I think 2021 could be quite exciting for Labuan, especially also, as I just said then, when it comes to Islamic finance. And there's a concept where even their ESG, environmental, social, and governance, has very similar concepts for the goodness of humanity with the Islamic concept, the Sharia concept of makasi. So there's even an overlap there between Islamic finance and ESG. So yeah, we're very, very excited by the opportunity which Labuan brings forth to us.
Thank you, Andrew. If the floor has any questions, please feel free.
Yes.
Hi, Andrew.
Hello.
Yeah, go ahead.
Hi, Andrew. This is Ian from Propine.
Hi, Ian.
Congratulations on winning the award.
Thank you.
Yeah, so I realized that, you are quite right that Labuan is actually very progressive when it comes to, especially Malaysia, wanting to be one of the crypto leaders in the Southeast Asia region. So, but I have almost a controversial question that I'm going to ask you. And, the listing, the launching of such security token exchanges, especially in the recent times, you can see that most of them, they just launch it with 1 or 2 listings instead of having more listings. So, there's always this big question on liquidity where, investors, like, why would investors want to come in since there's nothing to buy? So what have you got to say to that? Or, has the security token exchange actually gotten it all wrong?
Yeah, it's a very good question. I was just previously on a call with the with institutional clients. I was a moderator for the FIX, the Financial Institutions Exchange trading community. So their members are my old shop, UBS, Credit Suisse, Goldman Sachs. So I was moderating a panel about the future of regulated digital assets. So not so much crypto, not so much Bitcoin, but regulated digital assets. And on the panel was the SGX, the Singapore Exchange, Bursa Malaysia. We had the Swiss Digital Exchange, HSBC, and also a vendor of traditional trading technology, ION, from Japan. So the point there was that, look, I think people from the crypto world were kind of thinking, the next evolution will be so-called STO, security tokens, You know, what is not a utility token, what is actually a security, let's list those. And maybe the asset class will be real estate. So we've seen, you know, the classic was the St. Regis Hotel listing in the US of a ski resort. But what the big institutional players are looking at is actually, it's actually bonds. So they're looking to list digital bonds. So that has already happened here in Singapore. So the SGX has done an OLAM, and the issuer was OLAM, a big Singapore commodity company backed by Temasek. So we've actually seen the institutionalization of assets and the digitalization of the assets and also the fractionalization of the assets. So it actually is happening not so much in equities, but in bonds. So yeah, the tranche, the SGX did $100 million issuance. It was done in parallel with a traditional issuance, but nonetheless, it was done by them. And HSBC was what's known as the sell side facilitator, the originator, and Temasek was sort of there behind the scenes. Bursa Malaysia is also looking at bonds as a proof of concept. The reason why both of these institutions, these exchanges are looking at bonds is because, as SGX said, currently to do an IPO for a bond or an issuance, there's 650 processes. The amounts of, as HSB said, the new paper is not so much physical paper, it's emails, PDF files, and Excel spreadsheets. So how can we use blockchain technology or distributed ledger technology to cut down on this massive pain to issue just a vanilla bond, and also the settlement cycle? From the crypto world, we're used to instant T0. You know, you buy and sell your Bitcoin straight away, and pretty much it's in your bank account. Even for an electronically traded bond, it can take up to 5 days. In Thailand, it could take up to 3 weeks. So I do hear your point that for maybe a so-called security token, maybe the liquidity may not be there. But what I would suggest in other asset classes, which can be digitized, such as bonds, I think you will find liquidity there, because whether it's done on an Oracle database or whether it's done on a piece of paper or whether, you know, the issuance is done on the blockchain, I think we will have institutional participation. So I do share your concerns, but I do think that maybe to date we've been looking at the wrong asset class. And I also note that in Singapore, funds can be dematerialized and therefore listed on a digital exchange. So in Singapore, there's this whole new offering called VCC structures, variable capital companies. We've seen during the COVID period about 100 or so of these new VCC funds being set up in Singapore. And this was basically to bring back into this region a lot of the Cayman funds, which were set offshore in the Caymans. But Singapore has said, look, let's bring these funds back here into Singapore. And then if we can have them set up in Singapore, then why can't we then potentially list them? So typically with a fund, you have a monthly subscription and redemption cycle, but why can't this be a tradable asset? And probably the last thing I'll say is that for real estate, I do get your point. You know, you could do an STO of a very illiquid, say, ski resort or a Bali villa, and it doesn't really trade much. But I note that the Singapore Exchange, again, you know, that the Singapore Exchange is going to be issuing a REIT future, a derivative contract. So that's going to help with price discovery and also with hedging of any asset. So if I were to buy a Bali villa, potentially I could hedge that risk by buying or by selling actually a REIT future to neutralize my market exposure. So I think in this part of the world, the right infrastructure is being set up to propagate digital assets. But I do agree with you that it may not be what we originally thought. But yeah, like I think watch this space, because I think bonds are going to be quickly digitized.
Sure.
Yeah, and I think that could be the asset class which we need to look at first.
So it's, you know, interesting, Andrew, that you talk about bonds, because, you know, I'm sure you are aware of the recent boo-boo amount. You know, the China Construction Bank pulls out from the US $3 billion blockchain, the bond, basically, but bond listing. So what do you think that it's the lies ahead for asset tokenization and this sort of bond listing in the market, and what are the challenges that we will actually be faced with?
Look, I think the so-called boo-boo in level one, there was a big, probably maybe a bigger geopolitical story. We also saw with a traditional issuance, with ants, our friends,
Yes.
Mr. Jack Ma.
That's right.
So we saw not just a bond in level one, but we saw a security ant going to be listed in Shanghai and Hong Kong, when bigger than the Aramco deal, 38 billion capitalization. So look, I think we do have to be careful when we do an issuance that we check with the regulator, we check with all parties, what we say, we should be saying. So look, I don't want to comment too much about the boo-boo, so-called boo-boo, but yeah, look, I think if it's going to be a regulated security, whether it's or if it's a share or if it's a digital bond, I think we just have to be maybe just do extra due diligence, if it does involve areas like mainland China, because we have to understand that Xi Jinping himself has said, Bitcoin is not to be traded in China, whereas sure, digital distributed ledger is okay, Chu Kuai Lian is okay, but bitte buha, so yeah. I think we just have to be, recognize China. But just talking about China, I am very encouraged by they are talking about digital renminbi, so central bank digital currency. So I noticed that Bloomberg's talking about in Shenzhen and in Suzhou, the Venice of China, just near Shanghai, they're going to be doing digital currency. So I think the regulators are coming around. I think it's very encouraging, as I alluded to, that Singapore, the SGX has done a digital bond, Bursa Malaysia. So I think we're in the very exciting region, particularly in Southeast Asia. I think this is where all the action is happening. I mean, that's what I think even the Swiss Stock Exchange, I said, why are you here in Asia? Why aren't you in Latin America or in Africa, where all this digital revolution is happening? But he just said, look, we think this part of the world is where the digital revolution is going to happen, not necessarily America, all these other jurisdictions.
But what do you think are the biggest challenges that lie ahead?
I think we've seen, we just need to be very, very sure that when we talk about digital securities, we're not conflating it with crypto. So I'm not saying that crypto is good or bad, but the underlying, it has to be regulated. So at the Gibraltar Stock Exchange Group, we've always gone around getting our licenses. So in Europe, we are fully compliant to MiFID II, which is the very strict European regulation. Post-Brexit, will be subject to the overall auspices of the UK regulator. In this part of the world, we've gone to level one, so we're always very respectful on the current regulation. So I just think, you always have to make sure you adhere to what the regulator says. And look, our group CEO, Nick, myself, we've been in capital markets in senior positions. In my last job at UBS, I was the CEO of the futures business here in Singapore. So anything, I have to go to the MAS and discuss matters with them. So I think the big caveat is just make sure that the regulator knows what you're doing and keep in touch with them. And maybe some of the younger people in the audience may not be used to this concept, because in the crypto world it's largely unregulated. But I would just stress that if you have any doubt, check with the regulator. So in Singapore, the Payment Services Act, just double check with the MAS. So I think, to answer your question, I think people still may think that what they're doing may not need to be regulated, but my advice would be just always check. It's better to be safe than sorry.
Thank you, Andrew.
Thank you. Was there a question from you, Neha?
Yeah, but I actually covered my question as well.
Okay.